All right, so you want to know what's really happening with AI investing,
Right.
not just the hype, but like the actual tools that work.
Exactly, yeah.
So we're diving into this article, 5 AI-powered investment tools to supercharge your portfolio in 2025, to see what we can learn.
Sounds good.
And it's interesting, right off the bat, this article claims 75% of pro investors are already using AI.
That's a big number.
Yeah. So clearly something's going on here.
Definitely. And this isn't just about like robots picking stocks.
No, no.
It's about using powerful data analysis and personalized strategies that, most people haven't even thought of.
Right. Okay, so how is AI actually changing the investment landscape? Like, what's the big deal?
Well, I think the main advantage is that AI can analyze like huge amounts of data, way more than any human could.
Right. Makes sense.
And then it can find patterns that we might miss. So, for example, AI can look at millions of news articles, social media posts, even satellite images
Right.
to figure out like consumer sentiment or anticipate supply chain problems or even predict shifts in global markets.
So it's like having like a whole team of analysts working for you 24/7.
Yeah,
It's
exactly.
incredible. So it's not even just about speed, it's about uncovering like these subtle signals that can give you an advantage.
Yeah, exactly. Like an early warning system almost. Let's say there's a company with record profits, but AI sees like a dip in online reviews or maybe a slowdown in factory production from satellite images.
Oh, interesting.
A human analyst might miss that, but AI can flag it for you.
So you can get out before everyone else.
Right.
That's fascinating. The article also mentions personalized strategies.
Okay.
How does AI actually tailor investment plans to individuals?
So imagine an AI that, not only understands your goals, like retiring early or buying a house, but also how much risk you're comfortable with.
Yeah, yeah.
It looks at your past investments, how you reacted to like market changes, even your preferences, to create a portfolio just for you.
So it's less about picking the hottest stocks and more about like finding the right overall path for you.
Exactly.
This all sounds very promising, but the article then goes on to give 5 specific AI investing tools.
Yeah.
Are these the real deal or just marketing hype?
Well, let's take a look at each one.
Okay.
First on the list is Wealthfront.
All right. Wealthfront. Give us the rundown. What makes it stand out?
So Wealthfront is all about automation and low fees. It uses AI to like manage your portfolio, rebalance your assets, even do things like tax loss harvesting to save you money.
Okay.
So you don't have to constantly watch the market.
Like a set it and forget it approach.
Exactly. Perfect for someone new to investing or just busy. Plus, low fees make it really attractive.
Okay, so low maintenance and budget friendly. What's next?
Next up is Zigma. This one's for investors who want more control, but still like data-driven insights.
Okay, so hands on, but with data backing you up.
Right. Zigma analyzes your portfolio and gives it a score based on like risk diversification if it aligns with your goals.
Got it.
It's like having a personal analyst constantly checking your investments and giving you advice.
So you understand not just what you're invested in, but how effectively it's all working together.
Yes. And it gives you specific recommendations like adjust this or maybe consider that for tax purposes.
That sounds great for people who like to dig into the details but want like an extra layer of guidance.
Exactly.
Okay, so we've got hands off with Wealthfront, data-driven DIY with Zigma. What else is out there?
All right. Next is Trade Ideas. This one's for active traders.
Okay, so we're talking about people who buy and sell stocks like all the time.
Yeah, exactly. Looking for quick gains.
Got it.
Trade Ideas helps them spot those quick market movements and has this AI engine called Holly.
Holly. That's cool. What does she do?
So Holly analyzes market data live in real time.
Wow.
Looking for those moments when a stock might suddenly jump up or down.
So it's about speed and spotting those tiny trends before they're gone.
Yes. Many day traders love Holly's insights. But, active trading is always risky, even with AI.
Of course. Yeah. All right. What's next?
Next is Betterment. This platform tries to balance AI automation with like human expertise.
Oh, interesting. A hybrid approach.
Yeah, so Betterment uses AI to build and manage your portfolio, but they also have human advisors to give you advice and support.
So it's not just algorithms making all the decisions.
Right. It's more of a team effort. AI does the heavy lifting, but you can still talk to a real person.
Okay, so that's good for people who want that personal touch.
Exactly.
Okay, great. Last one. What's the final tool?
Last one is Kavout. And this is really interesting for value investors.
Value investors. So those are people who like look for those hidden gem stocks that are undervalued, right?
Yes. They believe in buying low and holding long term, because that would help them find those potentially overlooked companies.
Oh, what's the secret sauce?
Kahoot uses AI for something called predictive analytics, and they create these K-scores for stocks.
D-scores, okay.
Yeah, it analyzes a ton of data to find companies that might be out of favor with the market right now, but have really solid fundamentals.
So it's like an AI treasure hunter.
I like that. It's a great tool for those who are patient and do their research.
All right, so we have 5 very different AI investing tools, each with their own strengths. But, there's a big question looming. Can these tools really predict the market?
That's the million-dollar question.
The article even hints at it.
But we need to be realistic. No tool, no matter how good, can perfectly predict the future.
Yeah, that makes sense. Too many things can change.
Exactly. There are just too many factors involved.
But the article does mention success rates. Are there, actual numbers to support these claims?
Unfortunately, not really. It's often like that with these tools.
Oh, okay.
They might show you case studies or test their algorithms on past data, but they rarely tell you how they actually perform in the real world.
That's fair.
So it's more about understanding the probabilities and the trends, not getting a guaranteed prediction.
So AI is a tool, not a crystal ball.
Precisely.
Yeah.
Smart investors use it to help them make better decisions, not to, replace their own judgment.
Okay, so if you were just starting out with AI investing, which of these tools would you try first? Based on what we've talked about.
Well, it really depends on you
Yeah.
and your goals.
Right.
Are you a beginner wanting something easy?
Mm-hmm.
And maybe Wealthfront's a good place to start. Do you like data and making your own decisions? Then maybe Zigma. But there's something even more important to think about.
Oh, what's that?
We have to remember, AI investing is still pretty new. As more and more people start using these tools, there could be some unintended consequences.
Unintended consequences, like what?
Well, what happens if everyone uses the same AI tools to make decisions?
I don't know.
Could that create market bubbles or unexpected crashes?
Oh, wow. That's a really good point. Those are some big questions.
Yeah, and we're just starting to explore them.
This is getting interesting.
It is, but let's save that for part 2 of our deep dive. I think you have a lot to think about for now.
Definitely. I do. So last time we were talking about some of those potential downsides of AI investing.
Right, what happens when everybody starts using these AI tools?
Exactly. Like if everyone's using the same tools to make decisions.
Yeah, imagine all these AI algorithms, trained on the same data, all pointing to the same undervalued stocks or whatever.
So everyone rushes in, buys those same assets, and the price goes up artificially.
And
Could we see AI-driven bubbles?
it's definitely possible. The valuations could get totally disconnected from the actual companies,
Yeah.
and we know what happens with bubbles.
They burst.
Exactly. And that could have some pretty big consequences.
Yeah, that doesn't sound good. Are there, any historical examples we can look at to understand this better?
Think about the dot-com bubble back in the 90s. Everyone was so excited about the internet, pouring money into tech companies, a lot of which, didn't even have real business plans. And when that bubble burst, people lost a ton of money. Now imagine that, but with AI driving the hype.
So we're talking about, potentially much more volatile markets and the risk that if those AI predictions are wrong, a lot of people get hurt.
Exactly. And remember, these AI systems are constantly learning,
Yeah.
changing.
Right.
So even if we figure out how to deal with some risks today, new ones could pop up as the technology gets even better.
It feels like we're always trying to catch up.
Kind of, yeah. And that leads to another big point, how fast AI is developing. What seems like a safe, reliable AI tool today, maybe it becomes outdated really quickly, or even risky as new algorithms come out.
So you're saying investors need to be ready to, adapt,
Yeah.
constantly reevaluate the tools they're using.
Yeah, absolutely. They got to stay up to date on what's happening in AI, understand how those changes might affect their investments. It's not just setting it and forgetting it.
Got it. So how can investors actually do that? Stay ahead of the curve when everything's changing so fast?
Well, there are a few things they can do. First, follow those industry publications, the blogs and stuff that focus on AI in finance.
Okay. Makes sense.
That'll help them keep up with the trends and new developments.
So staying informed. What else?
Going to conferences and webinars is huge.
Oh, yeah. Good point.
You get to learn from the experts directly. Sometimes they even talk about really cutting edge AI strategies. And it's a good chance to meet other people in the field.
Build your network.
Exactly.
Any other tips?
Yeah, this is key. Investors need to educate themselves about the tech behind it all.
You mean like not just using the tools, but understanding how they actually work?
Right. Learning about machine learning, data analysis, even how algorithmic trading functions.
So you can ask the right questions, figure out if the tool's even doing what it claims to do.
Exactly. Informed investors, they're the ones who can make smart decisions, avoid those potential risks.
Knowledge is power, as they say.
Absolutely. And it's that power that can help you navigate this whole complex world of AI-driven finance.
This has been so insightful, and we've only just scratched the surface. I can't wait to dig even deeper in part 3.
Looking forward to it. We'll talk about some even more nuanced things investors need to consider.
All right, we're back for the final part of our AI investing deep dive. We've covered a lot of ground, the tools, the potential benefits, those unintended consequences. But now I want to look at like the really big picture.
Yeah, that's important. As AI gets more and more embedded in like all parts of finance, we got to think about the long-term effects on the market itself, not just for individual investors.
Right, the whole system. Okay, so what are we talking about here?
Well, one thing is market efficiency. As more investors use these fancy AI tools, the market might become, more efficient.
More efficient. Okay, what does that even mean, like in this context?
So in an efficient market, prices change really quickly to reflect all the available information.
Makes sense.
If everyone's got access to the same AI insights, those insights get baked into stock prices almost instantly.
Oh, I see. So is that good or bad for the average investor? Does AI level the playing field, or does it make things harder?
It's tricky. Could be both.
Hmm.
On one hand, it might be harder to get a big advantage just because you have more information than someone else.
Right, because everyone's got the AI telling them what to do.
Exactly. That old edge of having like insider info or special research, that might not be so valuable anymore.
So AI democratizes things a bit.
In a way, yeah. But on the other hand, it could also create NEW advantages for those who can build or afford the most powerful AI.
Ah, so it's like an arms race. The people with the best tech win.
Could be. And that raises questions about fairness. If only a small group has the best tools, it just makes things more unequal.
Right, that's a really important point. So AI could make information more open, but it could also create new divides based on who's got the best tech.
Exactly. That's why we need to be talking about this stuff. Figuring out how to use AI ethically in finance.
So it's not just about building cool tools, it's about making sure they're used responsibly,
Yeah.
fairly.
Absolutely. And that takes everyone working together, the people making the rules, the industry leaders, even the investors themselves.
This has been honestly eye-opening. We've learned so much about AI investing. It's incredible how much there is to consider. As we wrap up, what are like the big takeaways for our listeners? What should they remember as they, start exploring this world?
I'd say a few things. First, AI is changing the game. These are powerful tools for analyzing data, managing risk, personalizing your strategy.
But it's not magic, right?
No way. AI is a tool. You got to understand it, use it carefully, and be, a little skeptical.
Think for yourself.
Exactly. Second, remember those unintended consequences we talked about?
Like those bubbles, more volatility, and even new inequalities if only some people can afford the best tech.
Right. And lastly, stay informed. Keep learning about AI, how it's changing, what it all means.
Knowledge is power, especially with something this complex and fast-moving. So, to everyone listening, don't be afraid to explore AI, but do it smartly, ethically, and always keep learning. This is just the start. The future of investing is being shaped right now. Thanks for joining us on this deep dive.